Hey, everybody. Good morning. Hump day, Wednesday. Hope you are well. 10:30 here, Latvian time. 9:30 in Germany, France. 8:30 in London. Good morning, good evening, wherever you are. As the title of the stream today shows, I'm going to finally show a chart that Peter Schiff likes for once. This is not it. This is Bitcoin, of course. No wicks, no candles. Let's just look at a simple line chart over the past week. A couple mini Bart Simpsons, big Bart Simpson. I feel like there's a lot of anticipation, but also a lot of Maylocks being popped around the world. You know, you get nice phrases like this. Bitcoin is facing key resistance near 114, 115 with profit taking rising. Struggling to stay above the 200-day moving average. A failure to break 116 could lead to a drop to 110. All right, this was a scary day. People thought if it went below 100, it was going well lower. Maybe it would. I can give you candles if you want to see candles. But I want to show the big picture again with Bitcoin and gold we talked about yesterday. Okay. But just first, if we zoom in, let's even just leave the mean and the trend. Let's take off all the bands. Just the mean and the 50th percentile, which is the same thing as the median, although it'll be slightly different on this chart, but that doesn't matter. All right. Solid black line is the all-time OLS. We talk about it all the time. Power trend. Power curve. Circle is the mean, square is the median. Median is also basically the 50th percentile. All right, so the reason that these are not smooth is because, first of all, finance is never smooth. That would be 100% R squared. But the power trend evolves over time. And as you know, talked about it many times, we look pretty smooth from 2016. Pretty nice. Okay. Notice how the mean is 1x the trend. The mean is basically the trend. There are some statistical differences there, which even I couldn't exactly explain, but what I'm showing here is the mean all-time average of where the price is to the trend expressed as a multiple. All right, and as you see, the mean all-time is 1x. Okay, so 1x the trend. So whatever the trend is at the time, it's typically what the mean is. Median's a little bit less, 0.8x. Percentiles are even easier to understand, right? So I'll just take this off, put the 50th percentile back, which is going to be slightly different, but here's the 50th percentile. All right, so this is also essentially the median. So 50% of the time the price is above this number 5, 50% below. Where are we now? We're above. Okay. But if we put the all-time trend, we're right on trend. And we have been for basically 2 years. So I know this is cause for a lot of fear, FOMO, greed, anxiety, Maylocks. We're still on trend. And even if you go back to that, this point, which was here. This really scary dip for some people this October 17th dip. We got to 105. All right, when you pull it out and you just look at a chart like this with a daily close, it doesn't seem so crazy. But we are under trend. I would, of course, love it to be above trend, because every time we're above trend, we slightly pull that black line up. And every time we're below trend, we slightly pull the black line down. Everybody wants to know, are we going to have such keen interest in Bitcoin this 4-year cycle where we will explode higher, higher, higher like we did here, right? Before I get to the chart that Peter Schiff will actually appreciate, because normally I show charts that he hates and triggers him, let's look at these two from my buddy Sminston With on Twitter. All right, really interesting chart. Just for the life of Bitcoin, when we get to the pumps, okay, we can track how long Bitcoin pumped after the gold pump. All right, and some of these gold pumps were kind of meager, but it's a pretty cool little chart. All right, so for example, it took a whole year for Bitcoin to pump here, but this was obviously totally different market, but it was, one could argue, right on track for the 4-year cycle following the 4-year halving and following the first halving, basically. But let's focus on this period. All right, so gold's had a hell of a run in the last 2 years. Bitcoin has as well, by the way, had a hell of a run. But if you sort of layer this on, it's a question. Is Peter Schiff going to be right and this time is different or not? Because if you see like what happened here, all right, then we get into the meme stock pandemic trading takes over. It only took 2 months to explode here in 2021. Here's just a totally different market. Gold is taking off more than ever in the life of Bitcoin, and Bitcoin's kind of muted. So many things to say about this. I mean, the first podcast I did with my buddy, old buddy Fernando Ulrich down in Brazil, we said we look forward to the day when Bitcoin just trades in the markets like any other commodity. Gold, oil, copper, and it's just sort of another day. Of course, Bloomberg's going to make a big deal out of every thing that comes out of Bitcoin land, like they do that everything comes out of the oil world. But markets do what they do, right? One could argue that we're already pretty much entering such a phase. Still growing, according to a very strong power regression. 42% right now, but that's down from an annual growth rate of, hundreds and thousands of percent back here. Now we're 42%. In a couple of years, we'll be 30%, so on and so forth. A more shallow growth, which confuses a lot of people, confuses a lot of chartists, analysts, people that tell you about key resistance and key support, which, again, to be fair, they're probably right in the very, very short term, but understanding this over the long term and what these analysts say here, or here, or here, or here, or here, often wrong. And then Sminston put out yesterday, I guess it was. Yeah. Super interesting chart here. This is the copper to gold ratio now. So same deal. All right, showing the pumps of one and then the pumps to Bitcoin. Both on a sort of a normalized basis and then also on a just here's the regular price. This is fascinating that he came up with this one, but you know, copper to gold. So when copper pumps relative to gold, this chart goes up. Right? It says copper gold bull, copper gold bear. So right now we're in a bear. We still are in a bear. Copper's going down relative to gold because gold, of course, is flying, regardless of what copper does. Copper's going down. But that's not always the case. Okay. And very interesting here. These almost perfectly lag. In fact, they're a little bit Bitcoin, unlike this chart, right, where the gold tops first before Bitcoin tops, you know, at least according to this analysis, Bitcoin tops now first. So you get the negative number here, but it's almost exact, right? A month, 12 days, 2 months, very close. This 2012 top is hard to put too much stock in my opinion, but it's still interesting that he did it. But again, the important thing to put in to perspective here is what's happening right now. Right now, gold is screaming relative to a lot of assets. Not necessarily to Bitcoin if you look over a longer time frame. But to me, this chart shows like no urgency of a Bitcoin pump. And it just shows sort of a normal market. What's also interesting is Bitcoin is going up generally. Of course, it went down here in 2022, but it's going up generally, as we know it does, as this goes down. Now, of course, that would happen here, but he's sort of just trying to catch little pumps, like the part where we go exponential. So, you know, of course, it can go down and up, down and up, down and up. But the up is just so gradual here. And then this is just gold gets stronger and stronger in terms of copper. Copper gets weaker and weaker in terms of gold. We're not even close to a gold pump. So again, this is the first time I've even thought about a chart like this. It's very interesting, very interesting. There's no urgency here in sort of the industrial versus precious metal ratio relative to Bitcoin. Again, I have no idea if this is going to predict a next pump or if there'll be another pump. As you know, I've been on record saying, let's not discount the 4-year cycle until it's fully over. But this is really, really interesting because it at least suggests that when copper starts to pump, when the industrial market starts to get heated relative to gold, that's also a topping sign for Bitcoin. We're not even close to that right now. So very interesting. Very. I mean, let's just look at his. He's saying it's compelling. I agree. We're going higher. I agree. As an important macroeconomic signal, when it trends down, that is this, it signals a risk-off environment. What it is doing now, since higher copper represents more industrial activity, right? Higher gold represents flight safety. So, copper is an industrial metal. Massive conductor, and Yeah, very interesting. Very interesting. So we'll have to see when copper starts to seriously pump relative to gold. That could be a topping sign, but I don't see it anywhere on this chart. All right, so now let's go to the chart du jour. As I talked about, Peter Schiff's a chart that Peter Schiff might actually like. Remember, Bitcoin's a power curve. All right, it's important to keep in mind. Sminston knows that. A lot of people know that. You get this nice gradual dotted line there is a power curve. See BTC PL model, power law model. It's not a straight line on log scale. Right? Gold, Apple stock, S&P 500 is a straight line on log scale. Okay, here's log scale, base 2, roughly. Again, it doesn't matter the base. If you just turn it into any sort of a logarithmic on the left side, whatever you're charting will be a straight line if it's an exponential function. So it's important to not like cherry pick your lows for gold and then your highs, but measure the all-time trend. The all-time trend is 5.3%, not that amazing. But there's no one can doubt that we're getting into a pretty interesting territory. So let's try to juice that. I talked about this yesterday. Let's actually embrace this trend. Let's not say that it's a potential top, which I showed yesterday, based on the all-time trend. Let's just say we stick on this trend for a while. All right, so let's find a better R squared that can really show us. Like, for example, clearly, before I show you, this was a trend here. All right, when we bottom, this was Brown's bottom. Former Chancellor of the Exchequer and Prime Minister Gordon Brown of the UK sold most of their gold right here before it was about to go on a 15-year bull, 12-year bull. This would clearly be a nice exponential trend on that curve, okay? But it broke that trend, all right? So you never know. You just have to see. But the long-term trend is clearly here. So let's embrace what's going on right here. And let's pick the best fitting trend with a good R square. You ready? There we go. I didn't even take it back to here because it's a worse R squared. This is pretty much the best R squared you can get under the short term, even better than this. You just got to be artsy with it and play around. Yeah, this is still math. This is not lines on charts with no math, but this is the best short-term trend. 96.7% R squared. Pretty good. Now look at the CAGR. 40.8%. 40.8% per year. That's monstrous. That's now competing with Bitcoin. And in fact, this is a better CAGR than Bitcoin because Bitcoin's CAGR is declining on a power curve. All right. Bitcoin's CAGR will be 42% by the end of the year, then a little bit less next year, the year after. But with exponential assets, which is every asset other than Bitcoin, you can keep that number constant and rely on it. So the CAGR of Apple for 55 years was 5.3%. You could be way above the trend, you could be way under the trend, but that's what the trend was. All right, so anyway, Peter Schiff will really like this one. Let's embrace it. Let's see what can happen here. First of all, note that we are even here pretty high, and we'll drill down in a second, but we're way over the trend even of this amazing short-term trend, which is a 96.7% R squared. Let's now project out. All right, let's go out here. I think let's make it to 2050. No, sorry. I was going to take it to 2050, but it's a weekly, so it messes up the frequency. Anyway, let's even just go to 2030. Not a crazy price compared to what Bitcoin can do, right? 16 grand. But with exponential trending, by 2040, 470 grand per ounce. Peter Schiff would love this if gold stays on this trend. Now, so don't let it be said that I'm, in some Bitcoin echo chamber. I think if anything, you guys know that I'm not trying to do that at all. So it's possible. It's possible gold stays on this trend. But you still have to keep in mind all-time history, right? So, and by the way, it's not much. So gold has pretty much throughout the millennia been sound money pegged to government currencies. It's very rarely been free floated, which it has been for the last 55 years. So, Peter Schiff could make a blowhard case that, look, even now over the last 50 years, gold's been suppressed. Alan Greenspan said in the 90s that central banks, right about here, Alan Greenspan said central banks stand ready to sell gold should the price rise. A lot of conspiracy theories about gold. Maybe this is the true trend. Maybe this is where you need to get on board. Hodl the GLD. Maybe. There's a couple things to keep in mind, though. Gold is though it is a precious metal, monetary metal, it is constrained to the laws of supply and demand just like every other asset, whereas Bitcoin is not constrained as far as what the difficulty adjustment does. We know that there's only going to be 21 million units of Bitcoin, which is 100 million Satoshis. 2.1 quadrillion Satoshis, I believe, is the figure all time. With higher prices becomes more competition in the market, becomes more miners, more activity. And as they say, the cure for low prices is low prices. The cure for high prices is high prices. That is, if your price is too low, you want it to come up. If you're a producer, usually that happens if the price gets too low. And if the price is too high, you want it to come down as a consumer. Usually that happens. It's just the laws of supply and demand. Maybe Peter Schiff is right. Maybe this would be an amazing trend for gold to go on for the next 20 years. Let's see. Let's keep embracing this 40.8% CAGR. All right. So now again, I'm showing the full history, log scale. And we're going to do these percentile bands, just like I do here with Bitcoin, and I've always done, right? Which can be pretty wide bands, right? Tens of thousands of dollars apart each band. This is such a short-term trend line for gold. I'm going to zoom in now on the present, that these bands are extremely narrow. And again, the reason that they're lumpy here and smooth out there is you have to normalize it somehow. And I like to normalize it on multiples over or under the trend. All right, so that's why you just have to let it sort itself out. Just like here with Bitcoin, let it sort itself out. And then we can see that these past bands look pretty close to the projected if you do it that way. Anyway, back to here. Let's zoom in. It's too far. It's actually hard on this with this type of a chart, but let's zoom into like here. All right. Let's go to the extremes first, actually. All right. So 4 numbers on the tooltip. All right. Lowest ever based on a multiple of this trend line. Highest ever based on a multiple. So it's 0.9x on the low side, 1.1 on the high side. Notice how different that is than Bitcoin, right? Even Bitcoin with 15 years of data has more volatility than what gold has just been doing over the last 2 years around its trend. Okay, so Bitcoin can go down to 0.4x to the 20th. It can actually go down to 0.3 on the 10th. Or 7.8x on the 100th, which is never going to happen again, probably. And probably even the 10th is very rare. So I think it's more like this. 0.4x the trend to 2x the trend. That's what Bitcoin does. Let's look at gold over this amazing trend that we're embracing, 40% CAGR. 0.9x the trend to 1.1x. So really tight band. And this is what they mean when you say, the trend is your friend. Follow the trend. And again, I don't have any inside information, but I imagine that this is simple applied statistics. The likes of Jim Simons, Renaissance Capital, if they find a trend like this that's going, you just follow it. All right. So easier said than done, but if you run the numbers and figure out the game plan, it's just what you do. So let's even take the trend line off. Okay, you can utilize that. So 0.9 to 1.1x. Let's put the median on, 50th percentile. It's about 1x. I actually need to go out to 2 decimals here because everything turns out to be 1x, but median 6, 7, 8, 9. Okay. So right now, gold is indeed quite hot. In fact, on the 19th, when people were thinking Bitcoin was going under 100K, gold hit all-time high, and this is also an all-time high relative to this local trend. Okay, 1.1x the trend. Good morning, MP. Good morning. So yeah, I mean, if we stay on this chart, Peter Schiff will be very, very happy. If we stay on this trend, I mean, and there is logic to stay on a trend. Just follow the trend until the end. Trend is your friend. You could use, the 0.9x as a trailing stop, whatever. Not bad. Not bad, I have to say. But you still got to think about big picture. All right. This is a very cherry-picked trend line. Not that long. About 2 years ago, I started it at basically the best possible point, the lowest possible price to give us the highest possible trend in the short term with the best possible R squared. All right. So it's, but again, I believe this is probably what some of the quants like Renaissance Capital were doing a long time ago. It's a monstrous return. So again, got to start to ask these questions. What's the cure for high prices? If you're a consumer, more high prices, more people will come in to produce, take advantage of those high prices, and then the price will come down. Gold is still responsible to those laws of high supply and demand, like every other asset. Responsive, also responsible. Has to answer to those laws. Bitcoin does not, because Bitcoin has the difficulty adjustment. But you also can just use your eyes here. This is the fun thing about trend lines, right? Like, you guys tell me, how likely is it that gold over the long term stays somewhat on close to the 1, which is not a great R squared, but it's not a terrible R squared, 78%, 5% CAGR, or we stay on this new 40% CAGR, 97% R squared, which Peter Schiff would love. And eventually we'll get you some amazing prices. I got to pull this out to 1 million so you can see when it would hit 1 million. I don't know. I mean, if buyers suppress, the only entity that could truly suppress it would be governments. It's not really suppressed in the market, right? If people don't want to buy it. Just going to have to see how things play out with governments involved in this market. We saw what happened a couple weeks ago. Those shorts put on conveniently wiped out a bunch of the shitcoin market. Sorry for the vague answer, but I don't know. I imagine they want to accumulate Bitcoin at as cheap a price as they can. But let's use again Apple as the example. We talked about this. Okay, so long-term trend of Apple, even during their really dicey years in the 90s, before Jobs turned it around with iTunes and the iPod. Like gold, Apple is above its all-time trend, and its short-term trend is better. But the difference is, it's important, the difference, but it's not like as crazy as the gold over 50 years. This is what I think is what you got to keep in mind here. All right, you're looking at an all-time trend, long-term trend of 21% CAGR, short-term trend, solid black line number 2, 28% CAGR. You know, stick with it. I mean, like for Apple, it's been a good trend. It's been a good trend for the last 20 years. Stick with it for now. And then, like Apple, we can draw the rainbows and say, you know, a good trailing stop is probably not going to be the 0, because that's usually like such an extreme number. But the 10 is getting you close to. But even the 10, you got to be careful, right? So even the 10 here, you might want to stop out at $20. That would have been a terrible move. Or here. And of course, the fancier you get, I mean, you could run trend lines on trend lines and see, really when the overall patterns are crossed. And then, of course, the chart I wanted to go back to, which we talked a lot about yesterday, was Bitcoin in terms of gold. I'll show you the one turning it into dollars in the future. Actually, no, not yet. I'll show you the other one. I don't need to, lecture too much longer, guys, if you want to see other charts, but I would be curious what you think about this. This could finally be a chart that Peter Schiff would get behind from a Bitcoiner. The risk for you as a gold bug is still this chart. All right, so this is Bitcoin in terms of gold, which again is a power. We talked about this a lot yesterday. I don't want to maybe repeat it unless you guys really want to keep looking at the numbers, but right. The very, very cheapest that Bitcoin has been in gold terms was that day. All right, gold was screaming all-time highs. Bitcoin had a risk of going under $100,000. There it was. It's on 16th. Under 25 ounces of gold. But already a few weeks later, closer to 30 again. But still, look at this chart, look at the trends, look at the upward trajectory that it moves. Even though gold has really been doing well, you got to look at this. In 2022, it was 9. And if statistics mean anything, this seems like it's going to revert to the mean. Anything can happen. But probabilistically, Bitcoin is way cheap in terms of gold. And I stand by this chart, I'd say the most. You know, in theory, gold could run on this amazing trend for 10 more years. Right? Let's pull it out 10 years and just see what it is. All right, let's go out to 2035, year end, whatever. Get to $100,000 gold. Just keeps pumping at 40% per year. Peter Schiff would like that. Gold bugs will like that. In theory, they can both happen. There's room in the pot for both assets. So, you know, Bitcoin could also keep growing at this power curve against the dollar. But then you got to look at Bitcoin's price in 10 years. Trend line is 1.5 million. All right, crosses a million for the first time in 2033. Yeah, I honestly see that in the short term. Although Ansi's comment is also interesting. Okay. If it's not overvalued, or if maybe this is something that, you know, all the world missed, right? All the gold bugs of the 70s and the 80s missed. And all of a sudden we're on this amazing trend, which even Peter Schiff would love, and central banks continue to buy gold. Maybe Bitcoin was a fake out, right? And it's too scary for central banks, and they were just going to reserve more gold all the time. Maybe. Personally, I'm happy to embrace the idea for a time, right? Let's just say, look, I mean, for here, Brown's bottom messed around at, you know, $200 for a few years, but when it finally started to go up, it was 12 years, 10 years basically, somewhere here. 2000. Actually, I think the bottom was even 99. Whatever. Let's give it the benefit of the doubt and say a little bit later even. From 2001 to 2011, 10 years. Maybe this thing pumps for 10 years like this. Maybe. But I don't really believe it at all. Look at this. This is just like a paradigm shift of appetite for the yellow metal. The world is on fire. We do have China and Russia are going to have their own system with gold. More than dollars. I still wouldn't want to buy it or hold it. This is much more like it as far as what the gold trend does. And I think to be even not bullish, not conservative, but like somewhere in the middle, you could say, okay, let's split the difference then. Just an exponential trend. So maybe it's not going to grow. You know, the CAGR is constant. So maybe it doesn't grow 40, but even it grows 30% per year. All right. So in 10 years, it's a lot. Maybe it's 50,000. Maybe it's $50,000 gold. Maybe. It's fun to think about. Peter Schiff would love it. Peter Schiff would love this discussion. Good evening, Tim. I need to think about that value. I haven't actually done this Kager on the market cap chart, but we can do it together. I mean, we can at least just estimate it. That's also a core sort of tenet of what I've been showing you guys is I don't believe you're going to be falling apart anytime soon. Fedwire is still super strong. It grows every year. Currencies grow every year in value, even though, a lot of countries have fiscal debt problems and all the rest. All right, let's just keep this simple. So Bitcoin's still on our, 96% R squared. So right now, this is like such a weak trend for gold, right? Because it's, let me show you. What I'm showing you in the market cap of gold is actually the price from here. I started exactly when Bitcoin starts, so like roughly, here. Okay, so when you see, God, I can't remember where I put anything. When you see this in the gold number 2 being projected out, 13 trillion, 15 trillion here in 2028, that is this trend line. It's gold at this trend from 2008, which is going to be faster. It's actually not at this trend line. It's a little bit faster because this is the trend since 1971. It's not this, though. Point is, we can use the dollar price to just extrapolate roughly because this trend's going to be pretty similar. Roughly. So let's say the price in 2035 is 85,000. That is a lot. 2000 trends are going to be a little bit higher. Let's say it's maybe 5, so it's 17 times more. So taking this again to 2035, if gold stayed on the trend that I thought, yeah, it would be 17 times higher, which is a lot. Times 23 trillion is 391 trillion. Seems unrealistic, doesn't it? That should probably be the next step, is just to show you. Instead of doing this 2008 trend, let's project this out on this wacky trend right here. I have a hard time believing. Peter Schiff will believe, but those that have believed him over the last 15 years have usually ended up in tears. Yep, absolutely. As I was saying, the laws of supply and demand apply to gold. They do not apply to Bitcoin as far as supply goes. Difficulty adjustment, fixed asset, only fixed asset in the universe. Hello, Mimi. I might not be the best channel for the Head and Shoulders, but I'll listen. Do you have a link? Send me a link and I'll check it. The short term stuff, I'm just not. I'm not good at, nor am I really interested in. Where's the? I think I had market cap somewhere. Strategy very similar. Price action. I know that's not. Crazy gaps. This is a good fit. You know, if you just use this as a very simple stop loss calculator, even the worst line, right, the 0 percentile, you know, you could hold it a year longer. Well, let's see when the stop loss gets above today's price. So today's price 4,000. Wait, is it 4,000? Yeah, it's 4,068 when I pull it into the model. So 4,068. So let's see when the 0 gets to 4,000. Right there. Not that long from now. 6 months. It's a hell of a trend. It's a hell of a trend. So if you hold gold, contrary to what I said yesterday, which I still believe a lot, which is the price in Bitcoin is always getting more expensive, even with this gold run. But still, if you just want to think in dollars and you have some gold, you know, look at the 0, the little arrow pointing up. It's 3,500 now. Like, just use that line as your stop loss. You know, it only takes 6 months to get to today's price with this growth, with this trend. So it's pretty, it almost seems pretty safe. Again, I'm never financial advice. I have no idea, but the fact that it's so fast, but I cannot see this over the long term doing this divergence. This is sort of Peter Schiff level of delusion. And like you said, Tim, it's it really is an extreme number. If you look at the market cap of what gold would need to be at $100,000 gold in 2035, I mean, it's hundreds of trillions of dollars. So it doesn't seem exactly like that makes sense, especially with the fungibility of gold. And as you said, MP, the regular supply demand, economic supply as well. Let me pull it up on the, what you say, Mimi. I swear with TradingView, their math. I can get it on my phone. I'm putting this into the chat if anybody's a TradingView expert. Is that the right formula in the chart? Because it's still not coming up for me. I just get a blank screen. Like, I clearly have the account to do it. I don't know why it doesn't draw the math. I could just search Bitcoin gold ratio. There is a ratio. Never mind. I have it. So for the XAU, again, I have it here, but mine is only a daily frequency. again, I'm not a head and shoulders guy, a short term guy. But are you saying this inverse head and shoulders here? So possibly it can go the other way. Bitcoin, we did this, did the shoulders, and then it will go higher. Is that the idea? I.e., more ounces of gold per Bitcoin very soon. Is that what you mean? I got it. I got it here, I think. Just the. I just searched for just a ratio that someone did on TradingView, but. Yeah. It's complicated. That's why I like the dailies, the daily charts, guys, the daily frequencies. You know, if the Peter Schiff trend holds and we stay in this rainbow for a long time, then yeah, maybe you do get down to, I don't know, 10 ounces of gold again per Bitcoin. But that's just so cheap relative to the power trend. Yeah, I think this is what you were talking about, Mimi. You were talking about this head and shoulders here. So shoulders, head, and then what, it could do another one and then up. I don't know. It seems like a lot of work day trading these charts. Like if you were here, would you ever expect that a couple months later in the fall it'd be down here? Especially with the run that we all expect Bitcoin to do. I don't know. Whereas if you sort of, at least what I'm trying to express in this channel is just sort of holistically see where we are relative to the trend. It's extremely cheap. Okay. Shoot me the link. Hopefully it's not a long link because I can only this StreamYard's stupid. I'll only be able to see your link, and then I'll have to manually type it in. But anyway, here's Apple again. So Apple, long term, short term, it's not drastically different. Certainly the short term is a better trend to follow. Like it makes more sense. It's, better R squared. It's closer to the actual price. Makes sense. Renaissance capital type stuff. But this one just seems insane. Peter Schiff said screenshot this, take it to all his debates. And then once it gets whipsawed out of here in like 3 months, just go back to the same old Peter Schiff. I guess I should combine now, since this is so crazy. I need to show you, which I don't have at the moment, is I need to show you the short term and the long term with the percentile bands. So you can see how just at what point do any of these bars just look insane versus the long term supply demand dynamics of gold. I have the simple one I'll show you. So even something more zoomed in, like here. Or just here. So here's the one I showed you guys a lot. This is just, again, this is on the long-term trend, big picture. You know, seems extreme. Doesn't mean it could be here and pull this thing up for like a year, 2 years. But to me, that means like a doubling in price, a tripling in price. It doesn't mean $100,000 gold by 2035. Those stranger things, I guess, could have happened. But and again, this one, pulling this out to 2030, you got $5,000 on the gold price on the upper percentile. And that actually answers the question right there. I mean, you're already... Can I take this to the 100th? Let me take this. Let me do it. Let me do some quick math for you. It's funny to play these extremes. Oh, don't I have? That's not the right one. One second. 1 second. All right, let's pull this out a little bit more. For 1 second. All right, we'll do this across 2 different charts, but you'll be able to eyeball statistically the most insane moves. Ever. And it doesn't look that great. Yeah, it's just like, there's so many things. It's really amazing. Same people said the dollar collapse was going to happen in the 70s, the 90s. All right, we've stretched this way out beyond 2050. Now, this is, as it says, the 0th and the 100th. So rather than being pulled up, it's literally the max. And it was here. It was here. Was here before, but then it was here the last time. So we haven't hit the 100th percentile. And if past this prologue, you could even pull it up a little bit more. Now, let's go to, say, 2035. 7,600. That's if it goes as high as it's ever been relative to the all-time trend and stays. But again, we could say that this is like some new trend that will always be on. But still, when would the old trend pass the new? Like very soon. So let's look now at the 100th, which is here. All right, let's take this off. Focusing on this line. 2035. 7.5 grand, 8 grand, all right? 2035. Now let's see how long it will take the worst case Not the best, because that's just going to be so insane. Let's just do the trend line. Let's assume it gets back to the trend, it stays on trend. When will it hit 8 grand? 2027. So there is maybe a nexus. I don't know. You understand what I'm saying? In 2 to 3 years, at this amazing trend, which is, by the way, and you can go back to this one actually, it's better with both trends and the CAGRs. So we're at a 40% CAGR of, let's say this new trend is the real trend, number 2. Like, amazingly, we, for the first time in world history, we stay on some new amazing trend, ever, new economics and everything for gold. 8 grand, the trend line will get you in 3 years, 2.5 years, 2.5 years. Which is way faster than the 100th percentile would take you. That would take you till 10 years to get to 8 grand on a way more established, solid, battle-tested trend line. You get what I'm saying? So now I'm back in Bitcoin mode, trying to pour water on Peter Schiff's parade. After showing him a nice bullish chart, crazy trend line, this is what he'd really have to contend with. All right, because the 100th percentile in the all-time trend in 2027 is only 5 grand. So it's, it seems extremely unlikely. I mean, it seems crazy unlikely that gold would do what Peter Schiff wants it to do and just, start making these insane valuations. No, I'd love to see it. Maybe. I mean, that, yeah, I tried it. I'm stupid on TradingView, to be honest. I have this. It's the same thing. It's BTC versus XAU. It's the same. XAU is the, what's it called? Like the COMEX symbol for gold. So it's the same ratio. You see 28 ounces. It's the same ratio I have right here. 28 ounces. Right. But honestly, I get lost in these. Like this could have been the Head and Shoulders, right? But then we have a new Head and Shoulders. So if I went levered short or levered long here, because I thought this Head and Shoulders was going to pop up, right? I'm not, have at it for all the day traders out there. It's not my thing. I'm more long term. What's the probabilities long term? And I stand by what I said yesterday. Like, are we ever going to see sub 10 ounces of gold again for Bitcoin? Because we're close to 3x that right now. Seems extremely unlikely. And you compound that with this idea where, I'm just going to take this off. This percentile band's a little goofy. Just look at this. So February 2028, yeah. This trend would be 7 years. Number 2, if number 2 actually happened, which seems wild, Peter Schiff would love it. But if number 2 actually happened in the gold market, that is, we hit 8 grand by start of 2028, roughly. Just to repeat what I said, that would be 7 years ahead of schedule when the absolute max number would have to be hit for a 50-year trend. 7 years ahead of schedule, and the 100th percentile. Does it not seem a bit optimistic? Anything could happen. The key thing here is, just like Bitcoin, by the way, when Bitcoin hits the 100th percentile on the power curve, doesn't matter if it's in gold or dollars, it doesn't stay there. Right, let's just look at the 9. Did I say 100th before? 90th. The hyper Bitcoiners think that it's just going to go here and we're off and we're on sats, and it's not how it works. If we ever hit the 9 again, it's going to be brief. And so now I'm being even more extreme with gold. I'm taking you to the 10, to the max, to the 100th percentile. You kiss it in August 2011, and then you're off again. Extremely unlikely. So there's my challenge to Peter Schiff. I can show you a great chart for gold. 40% CAGR. You've been at a 97% R squared. It's on trend for 2 years. How much longer do you think this is going to go? You've been wrong about Bitcoin for 15 years. Much more likely we revert to the mean. So instead of 8K by 2028, maybe back to 2. Or I could be generous and say, let's even double the all-time trend. Instead of 2K, 2.2K, we're at 4K, same level we're at today. Something like that seems probabilistically pretty reasonable. You'll be at Bitcoin Amsterdam? Definitely. Let's chat. No, I just mean I can't even engage. Like I'm not good at at all the day trading patterns or whatever, the swing trading patterns even. That's all I mean. So what do you guys think? Yes, also hugely important for Bitcoin and for gold, I guess. No doubt about it. Central banks hold more gold than Bitcoin. You know, there's 100 million Bitcoin that, or sorry, 100 million gold ounces. Not 100 million Bitcoin. 100 million gold ounces that get produced every year. So at $1,000 gold, that's $100 billion market, right? But at $4,000 gold, that's a $400 billion market. That's a lot of cheddar that no one in the gold industry has ever seen before, ever. $400 billion. And it also means there's going to be a lot of jokers coming in to the market trying to do things that, A, weren't profitable before. Okay, more power to them. You might find some gold that would have been very hard to find otherwise. But if you do find that gold, it's going to continue to come onto the market. And as they say, the solution to high prices is high prices if you're a consumer. And the solution to low prices is low prices if you're a producer. Or investor, I guess. Investors want those low prices too, of course. But we're quite high. We're quite high. We're statistically almost to the 100th percentile over the all-time trend. And I guess I need to make a combination chart of the trend lines, short and long. We will sort of see that soon. This nexus of this very, very impressive 97% R squared trend that gold's doing right now. What do you guys think the rates are going? Let me find the... this is very good for trading view. Here's the upper. Remember, this is banks lending to each other. The Fed controls this market. It's banks lending to each other. Trump wants this way low. Yeah. Powell's definitely out next year. Trump's more authoritarian next year. He's building his ballroom. He wants low rates. He'll get them. This is super interesting. Really, really interesting. Yeah, I honestly never thought about mapping this, right? It's like when, as he says here, when it trends down, it signals a risk off environment, what it's doing now, right? Since higher yeah, it's kind of confusing how I worded it, but it's going lower. So versus gold, gold is going higher relative to copper. So it's a flight to safety. It's a risk off environment. But I never really thought about how a risk on, meaning that's like traditionally people just think of the real economy as risk on, right? You're producing, building, investing for the future. That's when copper rises relative to gold. I never would have thought that that would coincide with peak Bitcoin. Very interesting idea. Right? He puts together some great charts. I might have to steal this one as far as, my chart engine goes, because yeah, I just never considered this possibility. This time is certainly different. I mean, what's copper doing? Let's look at the price of copper. So it's also going up, just not relative to gold, not enough. So yeah, it's interesting, right? So like in the 2017 bull, it was going up, and that must have been such a faster increase relative to gold. Same happened to be the case moving into 2013, although really interestingly scarce data there. And then 2021, clearly faster move than gold. And now both gold and copper are going up, but gold way faster. Really fascinating. I never would have suspected. This goes back to what I was saying about with Fernando. Like we look forward to the days when Bitcoin moves kind of like with the rest of Wall Street or whatever. Could this chart be proven wrong? Because this tells me, and I actually responded to this. I don't see but this doesn't show me any sense of urgency at all. It's like we're just continuing on. Copper's going down relative to gold, and it's really a mind changing sort of exercise that when the industrial market does well relative to gold, Bitcoin tops. Never would have expected that. Any thoughts? This is the most bullish case I can make for Peter Schiff. So we stay on this 40% CAGR. Bitcoin's supposed to be at 1 million here. Gold 50,000. If it's on this CAGR. If it's not, 3,000. My guess, somewhere in between, much closer to 3. 6, 9, 10, 10K. 50K by the time Bitcoin is $1 million would be basically the end of fiat, I guess. I hope you guys are enjoying this as much as I am. Like, I wish I'd, had interactions with Peter and were able to draw this, like, say, here, right? We could do the same bullish trend line, right, based on this action from 2001 to 2011. Then you can see we get a shallower trend line, but that would be it. And gold, of course, is not on it. Right? This is why this is a ludicrous trend line in my view still, even considering all the macro factors. Gold's got supply and demand to handle. And the gold market is now a $400 billion industry annually. By the way, how much is Bitcoin? Anybody know? You remember? Who remembers? Annual mining revenue. Annual mining revenue. Anybody remember? One second. Here is daily revenue in dollars. All right, so this is block reward plus fees translated into dollars at whatever the price is that day. Okay, so of course it's going to be a volatile figure. It will top when the price tops. All right. Highest day was just before the day of the halving, 2024. 100 million a day. And what is that? Sorry, I have to do stupid math. That would be 36 billion a year if Bitcoin continued to do 100 million a day. Do you see it doing 100 million a day? No, it does 20, 30. So if you want to roll that annually, you get this. And as you see, we are just about at the prior all-time high, which was 17 billion, $16.8 billion. Now, trailing 12 months, $17.1 billion. I need to show you this chart in gold because it seems unsustainably high at the moment. Anything can happen, but gold is now doing $400 billion a year in miner revenue. Bitcoin does 18. 400 versus 18. Oil routinely does $1 trillion a year. So Bitcoin still remains, the upside obviously remains incredible. I need to get to this chart in gold. Just exact same chart, just the gold network. Could continue for some time, but in my opinion, Peter Schiff's going to have to contend with this line. And even if he manages to pull it up a little bit like it did here, or even here, notice you can spike this. So we were at 322 and we got it up to 1,000. Although keep in mind, remember that's relative to the trend at the time. So gold price never hit 1,000. So it's just like pie in the sky number. Never hit 1,000 again until the 2000s. Or even the 2010s maybe. When did it hit 1,000? I'm curious now that I see this. It did it in 2009. Yeah. Year after the financial crisis, it did it. At least on a monthly. Might have done it before, but this is monthly. So this is what Peter Schiff has to contend with. If he thinks that this trend, which I have very helpfully painted for him and his market, 40% CAGR, great R squared, could continue for a while. But again, you're gonna run up against this red line. It's mostly what I wanted to show you guys today. Let's do the stock market tomorrow. We did Apple. We've done gold. All right. Again, relative to a range that Apple has been in since 2005, at also a 97, 98% R squared, it's, trend is your friend. But gold's got a lot to do to prove that this black line is anything meaningful. And it's not a repeat of this or this. Way different dynamic than what, for example, Bitcoin does. Let me know if you guys want to chat about anything else. Otherwise, I'm probably going to check out for the day. Really interesting chart from Sminston. Follow him if you don't. I'm very curious. Oh, sorry, that's the gold one. Here's the copper versus gold. Very interesting idea. And if anything, this just tells me to be calm and carry on. And if this reverses, maybe it could reverse to the violent upside. Rates stay low for another year. I'm wondering what the U.S. trigger for this could be to be positive. Copper versus gold. I don't know. Democrats retaking the House next year or not? Maybe. Some people aren't as scared about the authoritarian takeover as I am, but we'll see. We'll see. Hope that helped you guys overall. As usual, if you want to tip, please do. Value for value. You can do it at my website right here. Use BTC Pay. A lot of the information's on the website as well. We'll talk more gold, Bitcoin stocks tomorrow and see if we can figure out how far this stock market boom is going. And we'll see what the rate decision was as well. Thanks, everybody. Thanks for watching. Have a great Wednesday. Thank you, MP, as always, for getting up early or staying up late. Thank you, Daniel. I think that's the one thing we can be sure about. Take care, everybody.